And I guess, Marco, this is what I love about your book because I guess to some extent, over the years of watching geopolitical analysis, I wouldn't say I've been burned, but I've come to the realization that too often, the more sensationalist the story and the more that this seems like such a great idea on the geopolitical side, it just ends up being a dud. And I came to for me, the way I dealt with it was saying, well, you know what? Actual economics matter way more than politics. And yes, occasionally at the margin, the politics will matter more than economics. But usually, at the end of the day, I'd rather know what the central bank is going to do, or I'd rather know about fiscal policy would do. And so for me, I kind of have just tuned it out. Now, what I loved about your book was that you've taught me that I shouldn't tune it out, but I should take another approach when I'm thinking about geopolitics. And you've kind of alluded to it in a couple times when you've hinted about the real world constraints. Why don't you tell us how you think about geopolitics and how you marry those real life constraints with your financial forecasts?
Yeah, so when you talk about monetary policy and fiscal policy, to me, that's just politics. That's all I hear. And so it's just policymakers in position of power making decisions. And to me, the way those decisions are made is based on constraints, material world constraints. What is a constraint? Well, think about your own life. Let's say that your dream card is a Bentley Coupe GT. And let's say that you can afford one. So you go out and buy it. So, let's say that you only looked at your finances, your budget. Like a monthly payment for a Bentley Coupe GT, you know, is a lot, but you can probably afford it. But then there are other constraints in your life. For example, you might be married. Your spouse may not approve of a $4,000 or $5,000 monthly payment for a car that seats really only two people and maybe a little bit of room in the back. So your constraints are ultimately going to determine the outcome in your life or in this particular decision better than your preferences. Kevin Muir's favorite car is a Bentley Coupe GT. Does he own one? No. Therefore, his preferences are non-diagnostic. What you want is not necessarily what's going to happen. And so when we think about policymakers, your point about sensationalism usually plays upon preferences. Oh, you want to know what Donald Trump is going to do? Read his book, The Art of the Deal. That's where you will find out what he will do. Wrong, completely false. He is going to ultimately do what the constraints allow him to do. Those constraints sometimes can be financial. So there are cases where policymakers have to respond to market incentives, especially in emerging markets. You might have an election that puts a left-wing leader into power. Those are actually often buy signals because the market has probably rioted before or after the election. And so those leftist or populist or anti-establishment leaders end up having to do what they have to do because they don't borrow in their own currency. They don't have a reserve currency. They have current account deficits. They have to be financed, blah, 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 blah. So finance markets can be a powerful constraint on policymakers. But sometimes it's politics. Sometimes policymakers have to respond to the median voter that demands a certain type of a policy. And then it's up to an investor to sniff out where that median voter sits using polling, using data, using knowledge of the history of the country, the sort of the zeitgeist, the political zeitgeist of the moment. The point here is that there is a multitude of material constraints that impact policymakers in their decisions. They're economic, they're financial, they're structural, they're demographic, they're political. And yes, sometimes they're also geopolitical in the sort of a grand sense of geography and geopolitical imperatives. But these can be measured, they can be analyzed, they can be put into a net assessment, thus giving us a good sense of where policy is going to go. And I think the best way to kind of explain this is to use perhaps a contemporary example that is on everyone's mind. I would refer the listeners to one of your blog posts, by the way, Kevin. You recently wrote about AOC during Jay Powell's testimony, right?
Right? Yep.
That was an example of political analysis that I would have conducted. Because what you showcase there is this generational divide in America. And AOC representing sort of the millennials and Generation Z. And she's basically saying, and correct me again if I'm wrong, it's your blog post, but you're basically pointing out that AOC is telling Jay Powell, like, look, in the past, we didn't have inflation. So why should we think that it's going to happen this time if we're a little unorthodox?
Right.
And this is a really critical issue right now, Kevin, because I've talked to several hedge fund managers who have a view that the Fed will be more orthodox than we think because ultimately inflation is painful for the median voter. And I've heard this argument a lot. People push back on my view of unorthodoxy. They say, well, Marco, they're ultimately going to be more orthodox than you think because inflation is bad for poor people. But that puts the cart before the horse. Policies that generate inflation are extremely good for poor people. Don't tell me differently. Yeah, maybe in the long term, there's obviously issues such as inflation. But in the near term, the reason populists pursue policies that generate nominal GDP growth is because the median voter demands them.
Right.
So I think that we need to be very careful in sort of pointing out that price inflation in the past has hurt the average American. And that because of that, there will be this popular political push against inflationary unorthodox policies. That may be the case 5 years from now, maybe 10 years from now. But the reality is that the policies being pursued right now are ultimately going to be unorthodox because the political pressures are there in favor of those. What do I mean by that? I mean that by the end of this year, we're likely going to get another $3.5 trillion of fiscal policy, of fiscal stimulus. That will mean that in 18 months since the COVID recession, we have pumped about $9 trillion worth of stimulus. That's more than 10 times the American Recovery and Reinvestment Act that was passed in March of 2009, the $850 billion deal that was passed along party lines after the great financial recession. So we had $850 billion last cycle after the greatest financial crisis that led to household deleveraging, balance sheet recession, secular stagnation. We had $850 billion. Now we're going to end up somewhere between 8 and 9 trillion. And so that is not an outcome that reveals the preferences of policymakers. That's not an outcome that we have because the Democrats are in charge. That is an outcome that reveals the preferences of the ultimate political constraint, which is the median voter.